to our quarterly investment market update. Steve, in the last quarter we've heard a lot about inflation, interest rates and the war on Ukraine. That's ultimately ended up seeing a lot of volatility in the Australian share market and a bit of a roller coaster ride. Can you step us through what's happened in the last quarter?
Yeah, sure, Sam. And you're absolutely right about the roller coaster ride. When you look at this chart here, the bottom line I've got there is the volatility in the market. And you can see it was pretty benign until this last quarter. So the start of the quarter was the market having quite a big fall, Sam, almost in correction territory where it fell by about 10%. But you can see it then recovered. But in February, of course, that's when the Russian troops went to Ukraine. And again, you can see the market going down again. And then on March the 16th, the US did put up interest rates. First time in 4 years they raised interest rates. And even though that was widely feared by the market, in fact, both the Australian market and other markets around the world all went up from that point. So it was definitely a roller coaster. But in the end, Sam, Australian markets finished up by 2.2% for the quarter, and it's up around 15% over the last 12 months.
And the Australian market's actually done a little bit better than the international share markets.
That is right, Sam. And let's have a look at this chart, because you can see here that the Australian market's defied gravity in a way. It's up by 2.2%, but if you look at the US and Europe and China, why is this? It's got to do with the makeup of the Australian market. 55% of the Australian market is made up by materials, big mining companies, and of course financials. And when interest rates go up, or the expectations of rising interest rates, that's good for banks. And at the moment, one of the causes of inflation is rising commodity prices. That's good for the mining companies. If you go in other countries, their makeup is different, and particularly in the US, where it's got a large tech sector that make it up, the big Apples, Googles, Netflix, and they're the stocks that were hit hardest at the start of the quarter. So that's dragged down those markets. And of course Europe, well, it's right in the middle of the Russia-Ukraine conflict. So Australia, the lucky country, Sam.
Yeah, absolutely. And how's the bond market fared?
Well, Sam, if the equity market's been a roller coaster ride, then you've got to say that the bond market has been the tower of terror. It's the worst quarter of bond returns on record. Now, the reason for this is the expectations of interest rates, and also the new information coming in on inflation has pushed up bond yields by more than 150 basis points over the last quarter. Now, we don't normally talk about bond yields, a little bit esoteric, but when yields go up, bond prices go down. So that's what we're seeing. We're seeing the bond market pricing in expectations of future interest rates and future inflation, and that means the return of the bond market has been negative in the quarter.
And so with US expected to continue to increase interest rates, and here in Australia we've got an election coming up and the Reserve Bank is looking at inflation domestically, and we're anticipating that there is going to be an interest rate increase more than most likely after the federal election. Does that mean that the bond market is going to continue to fall?
That's a great question, Sam. We absolutely know that interest rates are going to go up here in Australia. Yes, after the election, I would think. And they're certainly going to continue to go up in the US. But the bond market has already priced in those expectations of future interest rates and priced in the expectations of where inflation will sit. So when interest rates do go up, that by itself won't affect the bond market.
Okay, thanks very much for that, Steve. It's certainly been that roller coaster ride, and we're anticipating that there's probably going to be a bit more volatility over the next quarter, or maybe in the next 6 months or so. Investors should continue to be prudent in terms of their investment approach, maintain a highly diversified portfolio, and really continue to focus on risk management. Keep in mind, Insight Private Wealth, we are independent. We're not owned by the banks or superannuation funds who are out to sell products. We don't have products of our own to sell you either. So we simply provide you with absolutely independent professional advice. So if you do need assistance with managing your portfolio, or you've got questions about investment markets or how you can invest and manage risk, please contact us. We'd be glad to help.